Any person can open an account in the bank and operate the same, but every banker must take certain precautions while opening an account of a customer. Hello, I'm going to talk to you about the special types of customers. First, let's look at the different types. The first type we have is bank passbook and statement of accounts. This small handbook is issued by a banker to his customer to record all his transactions. It helps the customer to know the actual entries made with the banker from his ledger account in any given period of time. The next one is account of local or government authorities. These are desirable by a bank as it offers great volume of business and gains reputation for the bank. A joint stock company is when it's considered as a separate legal entity from its members. Next is a joint account. When two or more people open an account together, it is known as a joint account. And executors and administrators have realized assets of a deceased person. An executor is appointed by will, an administrator by court. The next we have an unsound person. An unsound person cannot enter into a contract as it would be void. A partnership firm is when two or more people agree to share the profits of a business acting on behalf of them all. A Pradhanshan woman is a person who observes complete privacy and usually covers her face with a veil. A minor is a person under the age of 18, and a guardianship of a minor can be of a natural guardian, which is basically his parents, or a testamentary guardian, which is a guardian stated in the will, and the third is a guardian by court, which is appointed by the court. The next is an illiterate person. They can open an account by putting a thumb impression on all important documents. The next is a trustee, who is a person who manages the assets and properties of another. A customer's attorney is a person who appoints a person to act on behalf of him. Next we have an account of non-resident Indians, also known as NRI, which are basically Indians that live abroad. They are divided into two categories. First one is a rupee account, and the second one is a foreign currency account. Under that we have the teller system, where employees can make authorized payments of checks up to 5,000 rupees. A traveler's check, which is useful to people when they travel to several places. A gift check, which is issued in payment of cash by the customer. Credit cards, which are also known as plastic money. Certificate of deposits, which are marketable receipts issued by banks. And commercial paper, which is short-term uses promissory notes issued by companies. Under rupee account, we have ordinary non-resident account, which is just like any other with local funds. The next we have non-resident account external, which is provided only to leading banks. The next is non-resident rupee deposit scheme, which is a term deposit of 1 to 3 years. Next we're going to look at the methods of charging. The first method is lien, which is the banker's right to retain all securities of the customer in respect of the balance due. The second is a pledge, which involves the payment of goods as security for payment of a debt or performance of a promise. Hypothecation is a creating equitable charge of property without transferring ownership. The different types of mortgages are simple, which is a mortgage paid personally, anomalous, which is a combination of simple and usufructuary mortgage, and English, which is repayment of mortgage on a certain date. By condition sale, if the conditions are breached, then the contract exhausts itself and the transaction is closed. By deposit of title deed, when a title is delivered to the creditor from the movable property. And the last is usufructuary, which is related to the claim of use of another one's property. Now we're going to take a look at the types of lending or credit facilities. The first one is cash credit, where a banker fixes the limit of borrowing against tangible assets. The next one is overdraft, where a customer can be permitted to withdraw more than the credit balance in their account. Third is loans and advances, which consists of short, medium and long-term loans. Bills discounted or bills purchased is when a banker agrees to borrow the bill before the exchange date. Next we have the letter of credit, which is a type of financial arrangement provided to the person in need. These consist of two types, which is clean and documentary letter of credit and recoverable and irrecoverable letter of credit. The last type of lending or credit facilities is consortium advances. which is granting loans under consortium basis known as participating finance or joint finance. The last is the principles of types of secured lending. The first one is liquidation, which is the bank has to have the ability to obtain cash on demand. The second is safety, which ensures the safety of loans, creditworthiness of customers, etc. The third is profitability. The main objective is to earn profit on all lendings. The fourth one is purpose of the loan, just to make sure it's for a productive purpose and not a speculative one.